Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. National Financial Literacy Month is celebrated in April, which is a great opportunity for us to check and promote our financial situation and skills. Joining us for the segment, we have Sara Mehle. She's the ESG Index Strategist with Nasdaq Global Indexes to discuss the basics of what an index is and the evolution of the product. Sara, it's great to see you. Welcome back to Trade Talks.
Thanks, Jill. Great to be here.
Let's start with the very basics of what an index is.
Right, so indexes, while they can become quite complex, really just boil down to just simply being a list of securities, whether that's stocks, crypto assets, really emerging markets. We can really create an index of really anything. But really, you can think of it as a list of securities or a basket, whichever visually makes more sense or works in your head. But again, they originally consisted of stocks back in 1884. That's when the first index was published by Dow Jones, and that was stocks. But again, now we've switched over to cover various asset classes, security types, and indexes really help us measure performance. So they originally started out as a benchmarking tool, and really they just help us take the overall health or temperature of U.S. markets, of the economy, as well as various sectors and subsectors, and anything that we have an index for, we're able to measure the performance of.
And it's so interesting, Sara, because when we think about the markets today, it's all about digitization. I mean, anywhere you point or click, computations are available instantly, but they were actually tracked by hand originally for indexing.
Yeah, so like I mentioned, back in 1884, the Dow Jones Transportation Average was published. This was a list of 11 stocks at the time. And then in 1896, the Dow Jones Industrial Average was published. This at the time was 12. This is now up to 30, so you'll often hear this referred to as the Dow 30. We saw the S&P 500, start to track in 1957. And then on as technology was able to improve, we're able to do more powerful things in terms of indexing. So in 1971, the Nasdaq Composite started tracking, and then down the line in 1985 is when we started tracking the Nasdaq 100 index today. So really, when we refer to as these major market indexes today, you're typically going to hear of the Dow Jones Industrial Average, the S&P 500, as well as the Nasdaq 100 index.
And what is an index fund? How do investors utilize these?
Yeah, so in addition to benchmarking, indexes also now play a role in index funds. So an index fund is a mutual fund or exchange traded fund that's actually tracking the same names within those indexes. So you can have a major market index fund. So the Nasdaq 100 index is tracked by the Invesco QQQ ETF, symbol QQQ, which investors can buy. So instead of buying, one share of those 100 stocks that make up the Nasdaq 100 index, which really is not, really possible for many individual investors, they're able to buy one share of an ETF such as QQQ, which provides, a level of diversification across that index. So again, without buying those individual names, you're able to buy just one share, and that provides a very diverse basket of stocks. And today, index funds play a very important role within 401ks and retirement accounts. And so definitely, a very important topic to cover here today.
All right, Sara, we appreciate the insight. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.